Welcome. The point of this video is to change your worldview. To most people, the world looks extremely chaotic and unstable right now, and there are many reasons for that. But underneath all of these problems is a real failure happening in real time of the global currency system, and there's nothing abnormal about it. This is what happens when currency systems fail. They fail every 80 years or so, and that's exactly what's happening now. It's not that complicated. The things that are happening now are exactly what we would expect to happen at the failure of a currency system. So this video tells a story of where we are economically, how we got here, and where we're going. And once people can understand the currency system as it begins to fail, then people are in a much better position to take action and do things that protect themselves in ways that aren't being explained to ordinary people. If you can understand the basics of the world currency system, then you can take action as this chaos escalates. We're talking about the financial system, so the financial system is about money. So we're going to have to talk a little bit about what is money. And basically, money is a promise. Credit is a promise to pay you something in the future for something now. If I buy a government bond, I give a government money, they will give me more money in the future. I give a pension fund some money, they will give me more money in the future. So our society runs on promises and credit. Credit is an essential part of society. It's always, even before there was money, human societies had credit in small hunter-gatherer groups. The history books say if we're all in a small tribe and somebody went and hunted an animal or found a turnip, then they would give this and share it with the group with an expectation that the group would share. This was how the group allocated resources, by people sharing and expecting to be shared with. And even we can say that big part of our mental neurology as human is very concerned with getting what we're owed, with making sure that people aren't freeloaders. Now, as society got more complex, we had money, we had different kinds of money, from banknotes to digital bank tokens to credit derivatives to bonds, all kinds of ever more complicated forms of money. But it all comes down to one basic fact. Money is a promise. Credit is a promise to pay you something in the future for something now. It's very easy to make a promise. When I was a student, I got my first checkbook, and it was this new thing for me to have a checkbook. I was quite broke at the time, but it was my mother's birthday, and for her birthday I wrote her a check for £1 million. Now, this was just a bit of fun and we had a laugh about it, but there was obviously there a very big gap between my ability to promise on this piece of paper, here's £1 million, and my ability to give her £1 million. Quite an enormous gap there. Currency itself is a promise. If you look at a dollar, what is a dollar? It's a promise within the society, within the United States, that this piece of paper can be exchanged for $1 worth of stuff. I live in Europe. The agreement is, in the Eurozone, that this piece of paper, which is worth nothing in itself, can be exchanged for 50 euros worth of stuff. The main problem, I would say, is there's just far too much debt. Far too many promises have been made. Much more promises have been made than can ever be kept. There's something like $250 trillion worth of debt out there. These are all promises of value, and that is far more than the planet Earth can ever be productive enough to repay. It is much easier to make promises than to keep promises. If $250 trillion worth of dollar promises have been created, these can never be paid back, and this threatens the existence of the dollar as the global reserve currency. And we're going to go through how it got into this position, because the dollar is a completely unsuitable medium to be a world reserve.
Okay, what is the world reserve currency again?
Reserve currency means savings at the very highest level. So big institutions, big pension funds, central banks, they need to store large amounts of money for the long term. So the reserves is just basically savings at a huge level. Dollars can be created extremely easily. I think it costs 20 cents to make one of these, but they can be exchanged for stuff of real value. And so it takes a lot of extreme military and political and financial actions by the United States to maintain this piece of paper's role in the world as a store of value and a promise of value. And we're looking at this collapse in the credibility of that promises. All over the world, people are generally losing faith in the promise of a US dollar. To understand this situation, we have to look a little bit about economic history, which I guess most people aren't so interested in economic history. They're not interested in the present economically, but once you understand how we got into this mess, you'll see how it's unsustainable, and you'll understand the steps people have taken to get us out of this mess, and whether you can make a judgment on whether they're likely to succeed or not. Until 1922, the world was on the gold standard. This meant every nation had its own currency, and those currency units were tied to gold. Under the gold standard, when countries traded externally, they would import stuff from other nations and send out their currency, and then the other country might not have trusted them or might have been threatening war with them, for example. So they would build up piles of currency, and eventually, because they didn't trust this promise, they did not trust this paper promise, they would eventually periodically settle up with physical gold. They would swap currency for gold because they knew they couldn't trust other nations' promises. Basically, what ended the gold standard was the discovery of oil. At the start of the 20th century, Germany and Britain in particular realized that if they wanted to continue to have imperial reach and be militarily powerful and economically strong, they needed to get control of oil resources. Neither of these nations has their own oil in significant amounts, so they were looking across Eurasia, the Eurasian landmass around the Middle East, and they saw that in Mesopotamia, as it was known at the time, now called Iraq, there was huge reserves of oil. So Germany started building what they called the Berlin-Baghdad Railway. Britain was very keen to disrupt this project because they feared how militarily strong Germany would become. So in 1914, Archduke Ferdinand was shot in Sarajevo, assassinated, and this escalated and escalated until we were in World War I. I think 19 million people died. Before 1922, the amount of credit a nation could create was limited by the amount of gold they had. The currency units were fixed to the amount of gold, so they couldn't create extra currency units without bringing in extra gold. The gold standard really limited a nation's ability to fight war. The First World War was very expensive and it was bankrupting Britain, so in order to keep fighting, they needed to get rid of the gold standard and find a way to create more credit. So in 1922, in Genoa, Italy, Britain convened a conference, and there it was agreed that instead of just having gold as the core reserve, you could also use British and American banknotes as a reserve. And this completely changed everything because it gave Britain and the United States in particular the ability to create huge amounts of credit, and this allowed them to fight and win basically 30 years of war and instability, the First World War and the Second World War. We can look at World War I and World War II as basically one long war for control of energy, basically oil at that time. Fueled by credit, the Allies won the Second World War. And the prize, a big prize for the United States for this was they got their currency to be the world reserve currency. This has huge benefits to it called the exorbitant privilege. This meant that the dollar was fixed to gold at a price of $35 per ounce, and then every currency was linked to the dollar. So under Bretton Woods, this dollar became officially good as gold. It was the same thing and had the same price, and if countries traded with the United States and they built up a lot of big supplies of dollars, then they could always go and take their gold to the Federal Reserve in New York and swap their dollars for gold. After the Second World War, Germany and Japan in particular became extremely productive nations. They rebuilt their societies, rebuilt their industry, and a big part of that was exporting stuff to the world, particularly to this new super consumption nation, the United States. So they were exporting real things to the United States, and they would get these IOUs, these dollars in return, and they would build up reserves of dollars, but of course they didn't want dollars because the dollars are just IOUs with no value to them in themselves. So periodically they would take their dollars to the Federal Reserve Bank of New York, swap them for gold, then the process would continue. But this gave the United States a problem. Through the 1960s, they started to really lose gold because they were exporting much more than they imported. So I think at the start of the 1960s, the United States had like 24,000 tons of gold. By the 1968, they were down to 8,000, and they were on their way to zero. So this was a huge problem. They wanted to keep their gold, and they also wanted to keep the reserve currency status of the world. On August 15th, 1971, the US President Richard Nixon went on television and told lies. He said that foreign money speculators were attacking the dollar, and to defend it, he was going to sever the link between dollars and gold temporarily.
In recent weeks, the speculators have been waging an all-out war on the American dollar. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
That temporary measure is still in effect today. So this event is called the Nixon shock. The United States government had completely decided to not pay its debts, basically, and had unilaterally just completely changed the world's currency system. The Nixon shock gave the United States a really big problem. They wanted to keep the exorbitant privilege of issuing the world reserve currency, but now that the dollar was no longer linked to gold, foreign nations had very little incentive to keep accumulating dollars. After all, dollars can be printed almost infinitely by the United States. If they weren't redeemable for gold anymore, why would foreigners want them? So the solution to the problem the United States had was the creation of the petrodollar system. This was a genius move created by Paul Volcker, a young Treasury employee at the time, and Henry Kissinger and Richard Nixon. And what they did was, now that the dollar was no longer linked to gold, they had the idea that if the dollar was indirectly linked to Saudi oil, then that could support the dollar system for some years to come. So Henry Kissinger then went to Saudi Arabia in, I think, 1973, 1974, and he said, here's the deal. We're either going to invade you and take your oil, or we're going to make the oil market work so that that oil is only traded for US dollars. So then the US dollar became backed indirectly by Saudi oil. And this meant that any nation wanting to buy oil needed to have US dollars. To get dollars, any nation needs to send stuff, real stuff from their manufacturers, etc., to the United States. Then they would get dollars in return, and then they would give those dollars to Saudi Arabia or some other oil producer. And this meant there was a constant demand for dollars all over the world. Everybody needed them all the time. So this is a hugely imbalanced system. And the system means that the United States will keep on exporting United States dollars and importing real stuff. And that means that you can calculate some percentage. Some people say 10%, some people say up to 20%. Basically, because of this amazing deal for the United States, they get 20%, 10 to 20% of their GDP completely free of charge. And this is an incredibly good deal for the United States, but an incredibly bad deal for the rest of the world. And what particularly makes it a bad deal is that there wasn't much they could do with their huge dollar imbalances except take them and send them back to the United States to buy pieces of paper called US Treasury bills or Treasury bonds. These are the promise of more dollars in the future for your dollars now. And so this is called petrodollar recycling. After 1971, the international dollar system had two really big problems built into it. The first problem was that there was no way to settle imbalances. Previously, under the gold standard, if a nation built up too much of another nation's currency units, they could send them back and take gold in return. Under the new system, when nations built up too many dollars, what they would do is send these dollars back to the United States and buy US Treasury paper, Treasury bills or Treasury bonds, which are promises of more dollars in the future for your dollars now. And so there was just these huge amounts of US dollar paper, US paper being built up outside of the United States with no way to finally settle trade as gold had settled it under the previous system. The second big disadvantage of the international dollar system was pointed out in the 1960s by a Belgian-American economist called Robert Triffin. So Robert Triffin saw in the 1960s that the United States would have to run bigger and bigger trade deficits, hollow out more and more of their productive capacity to make sure that the world had enough dollars, and this would go on and on and on, making the United States actually weaker and less productive until the system blew up. The petrodollar system caused two big problems for Europe. The first was that they needed to work to get dollars to buy oil. And the second problem was in 1974, the United States and Saudi Arabia unilaterally raised the oil price by 400%. This made Europe much poorer, basically, because they need to import all oil, and they were completely reliant on a system that they couldn't control and could be used against them. The European central bankers from Germany, Holland, Italy were thinking of all kinds of ways, how can we get out of this system that makes us dependent on the United States and makes us overpay for oil. Through the 1970s, European central bankers like Jelle Zylstra and Wim Duisenberg, I don't know how to pronounce their names, they're Dutch, but they were really at the head of European efforts to fix this system. And what they wanted to do was they wanted to bring gold back into the international financial system at a much higher price to rebalance trade. But the United States said no. Henry Kissinger was completely against it. You can read really interesting minutes from his meetings with President Nixon where he's there, I don't really understand what they want to do, but we're not going to allow it. So the United States, through Henry Kissinger, said no, gold had to stay out of the financial system for the United States to maintain its dominant role. So the petrodollar problem in the mid-1970s became the seed of the euro. European central bankers wanted to escape the dollar system, but they couldn't challenge the United States directly, politically or militarily. So in secret, in private, they started making plans for the euro. This happened in an institution called the Bank for International Settlements, a very secretive institution in Switzerland where central bankers meet in private to control the world's currency system. Behind closed doors at the Bank for International Settlements, European central bankers started working on the euro, a way to escape the dollar system without creating a huge war. Generally, when currency systems fail, they tend to end in huge wars, and the European central banks were very keen to avoid that. The euro took decades to create, and because it was so slow that the European central banks had to support the dollar system by exporting real stuff to the United States, getting in dollars and using those dollars to buy oil. This was a really bad deal for Europe and an excellent deal for the United States, getting some percentage of their GDP for free every year. And you can even look at it, that the government of the United States, their huge social welfare programs, their huge warfare programs were basically being paid for by foreign nations. So you can say that the labor of people all around the world, surplus nations who were sending stuff to the United States, their labor was actually funding the United States government. Finally, in 1999, the euro was launched. This meant that Europe could stop accumulating US paper and basically stop funding the US government's warfare and welfare programs. And this gave the United States then a huge new problem, because they'd become completely dependent on importing stuff for the world and exporting IOUs. So then in 2000, China was fast-tracked into the World Trade Organization. They'd been pretty much on the edge of being a third world country, and they just completely re-geared their whole economy. People were brought in from farms into cities, into newly built cities in an incredibly short amount of time, and they re-geared their whole society and economy to suck in dollars from the United States and to export stuff. So if you go to Walmart or any of these stores, you just see an incredible amount of stuff that's being made by Chinese companies in return for dollars. And this brought the US international dollar system basically it's 20 years later, and now we can see that the relationship with China is falling apart. The euro was launched in 1999. As it was explained to me, the euro was built for the time after the US dollar as world reserve currency, and it won't be fully understood until then. So there's two things about the euro that make it very different to any currency that's been before. First of all, it's not linked to any nation state. The European Central Bank is not the Bundesbank or the Bank of France or the Dutch central bank. It's its own central bank, and there's a big advantage to that, in theory at least, is that they don't have so much political pressure on the currency as, say, the United States. We saw in 1971 that the President of America intervened to decide the value of the currency. And in democracies, it's often politics and the value of currencies is a very bad mix. Politicians are in the business of making promises to get elected or to stay in office, and using money or currency to keep their promises is one of the best ways they do it. They promise money for this or money for that, programs to their preferred groups, or basically bribing the populations very often to give the people who they think will vote for them what they want. And this often puts huge pressure on the value of a currency itself, because as central banks are forced to print more currency or borrow more currency, this threatens the value of the currency itself. And very often, fiat currencies, ones that are just created, the value is created by government decree, they tend to have a very short shelf life because you can create infinite amounts of currency, but there's only finite amounts of stuff in the world. So humans being humans, we like to make promises that we cannot always keep. So by creating more currency tokens, which are promises of value, then more and more promises are made, more and more currency tokens are made, and they can just be printed or typed into existence now. So the value of a currency is always under huge pressure from politicians. And the first innovation of the euro was to separate politicians from the currency. The second key feature of the euro is that the price of gold is not fixed as it was in most previous currencies, but it's just on the balance sheet at the market price. So the price of gold moves up and down, it fluctuates, and the European Central Bank is the first one to allow that fluctuation to be reflected on its balance sheet. And this gives the European Central Bank a very powerful tool in the event of a major crisis, because what they can do then is they can start printing euros and bid for gold on the open market, and then that bringing in gold will strengthen the currency, but also somebody as big as the European Central Bank bidding for gold publicly will get a lot of attention and will drive up the price of gold naturally. So most people are unaware of this very powerful weapon that the European Central Bank has. They don't talk about it openly at all. They very, very rarely mention gold or the fact that in an emergency they can start printing euros, buy gold on the open market, raise the price of gold hugely, and strengthen the euro that way. China and Russia have also copied this framework. They have gold on their balance sheet at a market price, and then in an emergency they can bid it up. And this is what looks like the solution to the world's debt problems that we have right now. But I'll get back to that later. In 2002, China was brought into the World Trade Organization. They had to be rushed in because America had a serious problem with the euro stopping funding their lifestyle by not accumulating dollars. They needed somebody else to take dollars and send them stuff. China stepped into that role. They re-geared their economy really quickly, took in peasants from the countryside into factories and built mega cities and very, 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 very quickly. And this was all fueled by taking dollars from the United States, sending them stuff, and then investing those dollars in the United States. After 2000, China started exporting huge amounts of stuff to the United States and building up huge dollar imbalances. They were then buying more US Treasury paper with their dollars, and this meant a huge influx of money into Wall Street. There was literally too much money in Wall Street. So this money was pushed out and created a huge credit bubble. And we saw a huge mortgage bubble in the United States, where anybody and everybody was being given a loan to buy a house that they couldn't afford, and that made the price of houses go up. So it became more attractive to people. Everybody wanted in. Fear of missing out. So more people were borrowing more and more money, and the standards for borrowing got lower and lower. And then they found that in Wall Street they could take these piles of garbage loans and repackage them and make them into derivatives and sell those derivatives all around the world. So you had this huge credit bubble upon another mortgage bubble, and it's just bubbles upon bubbles. And this blew up in 2008.
Seems like I showed up in a interesting moment.
And to solve this problem, which could have easily crashed the world economy, the United States government and Treasury Department printed $700 billion and gave it to these basically many fraudulent and financially insolvent institutions. This saved the system, but it was a disaster for the United States' reputation as people responsible for managing the world reserve currency. Printing that much money and giving it out really caused a huge loss of faith. And in 2009, China announced publicly that they would no longer be accumulating US paper. And that was a hugely important signal in saying that the dollar system is coming to an end. So a huge amount of the problems the United States is experiencing internally now can be directly attributed to the fact that their currency is the world reserve currency. It's bad externally for the rest of the world, creating these huge imbalances, and it's bad internally because it deindustrializes the United States and it creates a credit-fueled consumption society that is completely unsustainable. The dollar system has been very bad for the rest of the world for a long time, but it's also very bad for the United States. As described by Robert Triffin in the 1960s, that the fact of having the world reserve currency hollows out your manufacturing ability, guts your productive capacity. And we see that in the United States, what we call flyover country, where once very productive parts of the richest nation in the world, their industry is no longer required because all of that work has been offshored to China and other emerging market countries. So there's literally nothing for people to do. There's a huge opioid epidemic in Russia in the 1990s after their economic collapse. You had a term called deaths of economic hopelessness from drugs and from alcohol. And you're seeing a very similar pattern in the flyover states of the United States, where they have been gutted industrially and there's just not that much productive work for the people there to do. People who had very high expectations from what they'd seen before, from the culture, from their parents, that they could be a productive part of society and be wealthy. And suddenly that, because of the structure of the US dollar, that whole system of manufacturing was offshored to China and places like this. And this gave huge profits for Wall Street and increased Washington's power enormously. Inflows of capital from abroad helped blow up an ever-increasing credit bubble that disguised the fact that the United States was going broke, basically. But this was becoming more and more evident. You see, look at flyover country and the deaths of economic hopelessness happening there. And the sort of huge gap between the economic reality for most people and the very high asset prices led to this big moment where Donald Trump was elected United States president. Donald Trump was elected in large part because the people in flyover country, as it's called, had seen their lives fall apart, their societies and economic well-being fall apart due to the US dollar being the world reserve currency. So Donald Trump came in he was going to bring the jobs home and he was going to make America great again. Bringing the jobs home again actually means giving up the world reserve currency status, because the world reserve currency status forces the United States to export jobs. So the easiest way for Donald Trump to bring the jobs back home is to give up world reserve currency status for the US dollar. Some of his team, Wilbur Ross and some of us other members of staff, they talk about this.
What was perfectly appropriate in 1945 is singularly inappropriate as we sit here this year. That was US policy. We screwed up. The president has made that pretty clear, that he feels it was important errors historically in our policy decisions.
So as in 1971, Richard Nixon went on television and suddenly changed the structure of the international currency system. I say a very likely event in the next few years is that Donald Trump goes on television or sends a tweet to devalue the dollar, and that would immediately cause a huge run on the markets and achieve the effects that he wanted.
Hillary Clinton called you the king of debt.
Well, no, she didn't call me. I call myself the king of debt. I'm the king of debt. I'm great with debt. Nobody knows debt better than me. I've made a fortune by using debt. And if things don't work out, I renegotiate the debt. I mean, that's a smart thing, not a stupid thing. And I made a fortune.
How do you renegotiate the debt?
Because you go back and you say, hey, guess what? The economy just crashed. I'm going to give you back half. We have $19 trillion in debt. It's going to be very soon 21 trillion, not billion, $21 trillion in debt. And I will tell you, we are sitting on a time bomb.
The solution in some way is for the United States to give up world reserve currency status. This is going to happen anyway, but the big question is, does it happen by external actions from the rest of the world, or does the United States try to do it on its own terms, similar to how Richard Nixon did it in 1971 by a political decree that changes the world economic system? So a massive change in the currency system is happening, but it's the exact trigger and the exact mechanism that ends the world reserve currency for the United States is unclear, but I guess we'll find that out in the next year or two. It would be immensely positive for the United States and the rest of the world if the United States gave up reserve currency status. The United States has to spend a huge amount of military and political and financial energy to keep this piece of paper's role as the world reserve currency. It shouldn't be in that role, and it's completely imbalances the world economy. A big prize for major nations and currency zones is the ability to print your own currency to import essential natural resources, especially oil. The euro can be looked at as a way for Europe to be able to print its own currency for oil without having to use dollars. China also wants this prize. But the euro didn't succeed as well as it should have, as quickly as it should have. And that happened because in 2003, the United States invaded Iraq.
I want to rebuild our country. I don't want to rebuild. We're tired. We've rebuilt, if you call it that. We're destroyed, frankly. What we've done is so crazy. What we have done, the direction that this country has taken is so sad. But we're in the Middle East for $8 trillion.
We hear all kinds of explanations as to why the United States and allies invaded Iraq in 2003. A lot of the people on the left say it was to get the oil. A lot of people on the right would say it was to impose Western values or bring them Western values. And there was a big story of weapons of mass destruction that turned out to be completely false. But there's never been a very good explanation of why did it happen. The best explanation we see now is that mistakes were made and that the United States accidentally spent somewhere between 5 trillion and 7 trillion.
$8 trillion.
Flattening Iraq.
8 trillion with a T.
By mistake, because that's the story we mainly hear now, that it was actually a mistake. Now this is completely unbelievable, but the logic of the petrodollar system, if we look at it and follow to its natural conclusion, it gives us a much better explanation of what really happened. Under the petrodollar system, the United States and Saudi Arabia controlled the price of oil. And sometimes they could raise it when it suited them, or sometimes they could drop it. And this gave them enormous military and political and financial power. When the oil price is high, that creates higher demand for US dollars, because there's a higher price of oil means more dollars per barrel of oil, means better support for the dollar system. Under a monopoly system, it's very important to take competitors offline. And this is the most likely thing that explains the 2003 war in Iraq, to basically make sure that oil stayed in the ground and did not come to market, threatening the oil price and therefore the dollar system. We saw that there was all kinds of civil unrest in Syria and Libya, and Iran's oil supplies have been taken offline by sanctions. And we also see that Russia is heavily sanctioned, Venezuela. So it seems that anybody with huge oil reserves, apart from the United States and Saudi Arabia, finds it very difficult to get that oil to market, because that would threaten the Saudi and United States monopoly, and behind that threaten the international dollar system. The monopoly Saudi Arabia and the United States have over the control of pricing of oil is under serious threat. China is going around the world trying to buy oil for their currency, Chinese yuan, and Europe is still waiting to start buying oil in their currency, and Iran and Turkey and many countries are trying to bypass the dollar by using gold or alternative currency for selling of oil. This puts huge pressure on the international role of the dollar. If it loses its link to oil, the entire petrodollar system and the international role of the dollar, and basically the United States consumer lifestyle, collapses very quickly. So the United States is very actively, politically and militarily, trying to cut off any efforts by Iran, Russia, Venezuela and China in particular to bypass the dollar. China recently became the world's #1 oil exporter, and they really do not want to be paying dollars to Iran or to Iraq or whoever they're buying oil from, because this makes them a completely vassal of the United States, because to get energy through dollars, you're completely dependent on quite a hostile nation now. So a lot of nations are quietly trying to make side deals. Russia and China talk about exchanging yuan and gold, and Iran and also Turkey. Many nations are making these side deals where they're skipping the dollar completely in the oil trade. When other nations bypass the dollar in the oil trade, this puts huge pressure on the US dollar, because without the oil link, the United States dollar goes down in value and up in smoke, basically, because the value of it is exposed to being completely linked to the oil trade. And without that, we're back once again as we were after Nixon broke the gold link in 1971 with a piece of paper, and the world wondering, why do we need this? So the process of de-dollarization, as it's called, is accelerating, but it's very risky for a lot of the world. The United States has the biggest military, and they use their military to encourage foreign nations to use the dollar, and we saw what happened to Colonel Gaddafi and Saddam Hussein after they made steps to not use the dollar in the oil trade anymore. Both of them came to a very ugly end. So with the United States' huge military power, it's quite a risky thing and has to be done quite carefully to get out of this system, A, without drawing very harsh retribution from the United States, and B, crashing the world economy. The likelihood is that the dollar system is in its last days, but we don't know exactly what the trigger will be that will bring this to public consciousness and cause the actual panic that will see its end.
The coronavirus, you know that, right? Coronavirus.
It increasingly looks like that many nations have decided to step back and wait for the international dollar system to collapse under its own weight. They do this mainly by not accumulating more US Treasury paper in their central banks, and B, by looking for ways to escape the dollar system in oil and energy trading. The fact that the international dollar system is under huge pressure can be seen by recent actions by the Federal Reserve. On September the 16th last year, 2019, they started an operation called overnight repo. And what this is, they were printing or typing into existence billions of dollars every single day and giving them to commercial banks. And these commercial banks would then use those billions to buy US Treasury paper. And this was because that as foreigners have stopped funding the US government, the Federal Reserve had to print money, give it to commercial banks, and get them to buy the same paper that foreigners used to buy. And this is how they're funding their government. And they're very quiet about it. They don't call it QE, they reject that title, even though that's what it is. Just monetizing debt, creating money to pay off debt.
6.2 trillion, because it is 2.2 plus 4. It's $6.2 trillion, and we can handle that easily because of who we are, what we are. It's our money. We are the ones. It's our currency. We can handle it.
This is totally unsustainable. The Federal Reserve is printing money, giving it to commercial banks to buy this US Treasury paper. This is paper that foreign central banks used to buy. But now they're finding it more and more difficult to find buyers for US debt. So it's more and more difficult to fund the US government. And this is really happening behind the scenes. It's not being reported very well or accurately, or certainly in ways that ordinary people can talk about. Events are leading to what looks like will be a very big market crash, in my opinion. We saw a big one in 1987 and 2008, of course, but the outcome, I think, of this one will be very different, because the world, as we've seen, the euro and China and Russia have been waiting for and expecting this crash for a very long time. So as it was explained to me, and as I understand it, the plan for decades has been that as the dollar drops, as it inevitably will, other central banks can start bidding up the price of gold, and so that what they lose here, they gain here. And this is completely possible because the price of gold is purely arbitrary. Gold is fairly useless industrially, so unlike oil, the price can be anything and not really harm the rest of the economy. So for example, if oil went to $1,000 a barrel, that would completely freeze all industry, all transport, all shipping, and the world economy would grind to a halt. People would starve. But if the price of gold is 10,000 euros an ounce, or 100,000 or a million, it doesn't actually make that much difference to the rest of the economy. So because the price of gold is just an arbitrary number, it can be inflated to a very high number, and that will cover the losses on all the major central banks and institutions who hold a lot of dollars, who also have gold. So this seems to be the most likely solution for the dollar crisis. Let the dollar fall, bid up the price of gold, and then that forms the basis of the new financial system. As we de-dollarize, we also de-globalize. The United States no longer has its dominant position in the world, but we see basically three legs on the stool: the United States, Europe, and China. And each of those wants to be able to print their own currency to buy oil and other essential resources. They can't really trust each other with the currency, so much. No one in Europe, for example, is going to trust China to manage their currency in ways that we like. So that is the plan as I understand it, that as the dollar drops in value, the price of gold will be inflated, and this will cover the losses of the major players in the currency world, central banks. For the new system to work, gold has to have a much higher price, so that gives you certain ideas of it as its desirability as an investment at this time. I'm not here to give investment advice, but the outcomes are pretty obvious. Gold is going to be the next reserve asset because the world's central banks have decided. It's got a huge advantage over most kinds of promises in that it's not created by any national government. Because if a national government creates a currency, that gives it too much power basically to manipulate and devalue it. And the world actually requires some sort of asset that is free of political control, and gold fills that solution better than anything. It seems quite likely that a very large economic crash is coming. There will be a very bumpy ride for a large segment of the human population. A lot of people, especially those with a lot of dollar holdings, with dollar pensions, people really invested in the dollar system and other kinds of abstract wealth will lose a lot. But despite this rough ride, I think there's a lot to be optimistic about. When the world replaces the US dollar as the world's reserve currency with physical gold as the world's reserve asset, this is a much better system. There are reasons to be optimistic that although this transition to a new currency system could be a very bumpy ride and a lot of people will suffer and lose a lot and there will be a lot of fear and panic, but that the outcome was actually a more peaceful and prosperous world. And the huge difference is that the United States dollar requires a huge military and financial and political machine to encourage the world to keep using it, whereas physical gold, for whatever psychological reasons, is hugely valued inside human minds, and humans keep wanting it and valuing it, and it does not have any political connection to any particular government. So it's much better that the world has a neutral reserve asset that is not controlled by any particular government, and that way this can facilitate trade and peace in the world. So that's the story as it was explained to me. It's a set of plans by people to escape the dollar system without war. And of course, plans can fail and changes can happen, but it looks to me like the best explanation I've seen for the seemingly random and chaotic events of the last 10, 20, 30, 40 years. Viewed through this lens, a lot of the big moves by China, the United States and Europe make a lot more sense. So there's a massive shift happening from west to east, from the English-speaking debtor consumption-based nations to Eurasian surplus productive nations. Traditionally in financial crises, the creditors who call the shots. They get to decide the new system. If you look at the actions of the world's major central banks, it's clear that the choice is being made, that physical gold at a much higher price will be used to replace the US dollar as the world's reserve currency, moving from a world reserve currency system to a reserve asset system. Well, that's the story. It's been very useful for me in understanding and navigating the seeming chaos and instability in the world. I hope it can be useful for you too. If you have any questions, let me know. You can write to me at hi@superbubble.money and I'll answer any questions in the next videos and beyond. Thank you for listening.